If you bought shares of battery tech startup QuantumScape anytime recently, you have to be cheering today. It is a huge day for the stock. It's up more than 40% in a single day. That is a massive, massive gain. I'm Jason Hall. This is Investing Unscripted, and Tyler Crow and I have done a lot of videos here on this channel. I want to talk about what's going on that has the stock up so much, how big this news is for the company, and how investors should be thinking about it going forward. Before we get into the details on QuantumScape, though, just a reminder, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our special link. It's fool.com/unscripted. Go to that link. The Motley Fool is going to give you its 10 best stocks to buy right now for free. Check that link out after this video. Okay, let's get right to it. Here's what's going on with QuantumScape stock today. It's up 43%. Not a big day for the market, not a lot of other stuff going on. So that 43% jump, you have to be thinking there is a specific thing out there that's driving the stock higher today. And you would be absolutely right. So what's going on? It was a confirmation of some news that we already knew, some things that we already knew. And if you go back through our channel, search for QuantumScape, you'll see some videos where Tyler and I have already talked about this several times. But QuantumScape is in the stage now where they've gone from just developing and testing their solid-state battery cells in their own facilities to sending them to their OEM partners. They're still a startup. They're still developing their technology. They're still at least a year from commercialization. They've just started sending sample cells over the past year to companies like Volkswagen is one of their OEM partners, for example. They say they have about a half a dozen OEMs that are partnered with them right now. So why is this a big deal? Because now they're going from their lab tests to sending them to the OEMs that are going to be using these cells potentially, hopefully, in their cars in the future. So they're putting them through a more rigorous set of tests. They're also getting better information, third-party information that's less biased than the people that work for QuantumScape who want it to work well, that built-in bias, to the companies that absolutely it has to work, right? So they're getting better information and more rigorous testing from parties that aren't going to have some of the same biases that the people that work for QuantumScape could have and not even realize that they have. Now, we already knew this was going on. We've already talked about here on this channel some of the testing results. This is from the most recent shareholder letter we got from QuantumScape. This was back in October, but the company shared with us some data about prototype testing that they're getting back from their customers. They broke down the specifics about what their target is for about 800 cycles and 80% retention. And they said that one of the customers' battery testing labs achieved over 1,000 full cycles with over 95% discharge energy retention. What does that mean? Essentially, this cell substantially outperformed the expectations that the company had, like their benchmarks, like their minimum expectations that they need to see for the batteries to have the long enough life, generate the kind of range that their customers are going to want to put in their cars, that the OEM's customers are going to expect when they buy one of these vehicles, the reliability that they're looking for vastly, vastly exceeded it. And that was a real positive. Now, we speculated on this channel that Volkswagen might be that partner with this particular cell. And honestly, we were just speculating that based on the fact that that's their biggest partner. They're a backer in this company financially. They were an investor pre-IPO. They have a joint venture in place. Volkswagen is heavily investing in electric vehicles, and solid state could be a game changer there. And so far, QuantumScape is like their partner of choice, their technology of choice with their solid state batteries. This is the news that has the stock up so much today. The folks at Volkswagen are the ones that got that cell. And in a press release that came out, I believe yesterday, I'm going to pull it up on the screen. They confirmed that they did indeed test this particular cell, and they confirmed the results. So why is that important? Because it's confirmation from a third party that is probably being a little more rigorous and objective with their testing, maybe even than QuantumScape is themselves. And they did confirm that A-tests, again, here's the key word, significantly exceeded the requirements. That's a real positive, okay? That is a very positive. This particular thing was really interesting that they highlighted here that for an electric car with a range of 500 to 600 kilometers, this responds to a total mileage of more than 500,000 kilometers. So what does that translate to for those of you thinking about this in terms of miles? That works out to battery cells that would potentially last over 300,000 miles and still retain 95% of their charge. That is an enormous step forward in energy retention, longevity for the battery, and really game changing if that technology can perform at those sorts of levels. With that being said, how should investors think about this going forward? As a starting point, this is the most important number to remember. It's one single cell. It's one sample that they tested. This is not a full battery pack in a vehicle in real world conditions. This is laboratory testing of an A sample, of a single sample. There is a tremendous amount of work to be done to go from one sample cell that performed incredibly well to getting that technology at that level of performance in commercial manufacturing, making them, installing them in vehicles, and then selling vehicles. So we have to be very, very cognizant of that reality and cautious when factoring something like this into our investing thesis, particularly people like myself, probably a lot of you watching this that are bullish on the company and excited about its potential. It's easy to grab onto this and say, man, hold on to this tight because this thing is just going to go to the moon. And the reality is, this is one tiny little piece of data. It starts to confirm some of the things about the baseline thesis that solid state can be an absolute game changer. Now, here's the rub. All of the things that Tyler and I have talked about in other videos that we've made about it, that are the challenges, that are the hard stuff, the engineering problems, the scaling up manufacturing problems, all of those problems are still there. The company still has to, they've said they've made progress, but they still have to demonstrate the ability to commercialize this product, that they actually can manufacture it. Two things: manufacture it at scale. In other words, generate the volumes of these that it's going to, we're talking millions and millions of these to supply the auto market. Can you do it at scale? And can you do it at cost, right? This technology can be as amazing as we all hope it can be, but if it's not affordable, it doesn't matter. The average EV costs $50,000 right now. The average gas-powered car, diesel-powered car costs $30,000 on average in the US. You've got to bridge that delta. And this technology is expected to be one that can help lower those costs, right? So if we don't know that they can do that yet. So we need to be able to see them reliably, consistently manufacture this product. And we need to be able to see them reliably, consistently manufacturing it at a cost per unit of energy that makes it better. We don't know those things yet. So I think the reality is that as exciting as this news was, as awesome as it looks, and as much as maybe we're tempted to kind of raise the bar, to raise the threshold of expectation, I think investors should maybe rein things back a little bit and be mindful that this company, is it worth 42% more today than it was yesterday? Absolutely not, in terms of what we truly know about their ability to commercialize this product and this product's ability to perform to the baseline expectations. We got some really good confirmation from a really important partner, but there's a tremendous amount to do, and the hard work still is in front of it for QuantumScape. Would I be buying shares today? I'm going to pull that chart back up and we'll talk through that. If we were just anchoring on this 43% run up in the price, it might be tempting to say, heck no, this stock is not worth buying. But there's a lot more things to think about than just that. If we go back to the IPO, the debut price, stock is still down 57% from the debut price, and it's still down more than 92% from the peak. But we have to think about this more objectively. Let's look at it from a market cap perspective. I think that might help us think about this a little bit better. Was this company really worth $45 billion a few months after it went public? Absolutely not. At one point, the market was valuing this for more than a lot of the automakers, and it just didn't make sense based on where the technology was. Fast forward to today, $4.6 billion. That might not feel very good compared to $3 billion valuation a couple of days ago. But again, thinking about the massive market opportunity, valuation always does matter. When you're thinking about a company like QuantumScape, number one is your ability to deal with the level of risk you're investing in. This is pretty close to a binary outcome stock where if the technology doesn't deliver, if they can't make it at scale, at cost, and deliver to those minimum threshold expectations, it doesn't matter what you pay for it because it was too much. But if they can deliver, then this could still be an absolute game-changing investment. And at a market value of less than $5 billion, if the execution happens, they're able to monetize the product, they're able to scale up manufacturing through a combination of joint ventures, debt financing, maybe secondary offering starts to get more attractive as the stock continues to move higher, then the potential returns still look very, very attractive. Think about where you stand on that risk tolerance. And if you believe in the business and you see the potential continuing to play out, this market value for the business is still reasonable, but only if they deliver. If they don't deliver, like I said, it doesn't matter what you paid.